up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Moments away from the start of trading on this Wednesday morning. This is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are slightly higher, 0.2 up on S&P futures and NASDAQ futures. Russell 2000 futures, little change. Down at the New York Stock Exchange, you've got, I believe that's Her Eminence Karen Keller-Sutter ringing the opening bell. Of course, president of the Swiss Confederation there, because it's UNGA. You're going to have a lot of dignitaries over, and I hope she's wearing a Rolex, but didn't have to pay a 39% tariff to buy it. The Security National Financial Corporation ringing the opening bell. They do a lot of insurance work, and that's why their shares are down like 25% year to date. It's been a rough year for this team, but they're up over the last 5 years, so still not losing money over the longer term.
Well, Matt, with opening bell, I've got my eye on Alibaba because it is helping to lift the entirety of the tech sector today. You're looking at the ADRs trading around a 4-year high, up 8%. They revealed plans to ramp up their AI spending past an original $50 billion plus target over the next 3 years. They say they need to keep up because spending is going to exceed $4 trillion in total. They also plan to launch their first data centers in Brazil, France, and the Netherlands in the coming year, Matt.
And the Trump administration is seeking an equity stake in Lithium Americas as it renegotiates the terms of a $2.3 billion energy department loan. By the way, that loan by itself is like 3 times the size of Lithium Americas' market cap. Yesterday, before this massive rise. You can see 69% gain in the shares after Lithium said it offered a 5 to 10% stake via no-cost warrants. And Alphabet CIO Ruth Porat is speaking with our own Francine Lacroix at the Bloomberg Philanthropies Global Forum. Let's listen in.
Analysis and where you're going.
With the more we use AI, of course, the more energy it needs. How do you look at energy demand and infrastructure needs?
I like the way you frame that because the upside from AI is profound and we can only access it if we actually have the energy to power it. So it's important to keep those as 2 sides of the same equation. And clearly in the U.S. and in other places, U.S. we've underinvested in the grid for quite some time. And so we need to catch up. I think what's important is there are both short-term and long-term solutions that are right in front of us. Probably one of the most important, but it's longer term, is continuing to make advancements in things like nuclear energy, advanced energy solutions. And this is clearly a priority for the administration. We very much agree with it. We think it's imperative that nuclear energy is a part of the energy mix. At Google, as an example, we're the first corporate purchaser for an SMR offtake from Kairos. We've invested in fusion. But this is critical. And when you look at what China's doing, they've been investing in nuclear for quite some time. They have about 30 gigawatts of nuclear in construction, another 200 gigawatts in development. The United States needs to avail itself of that, and I'm pleased the administration is very focused on how to fast track it. Near term, there's some really important solutions. And I think what is important, again, if we execute against these things that are right in front of us, we can increase capacity rapidly. We need it now. This is not a 2030 need, it's a now need. We can do it and enhance affordability across the country, which is clearly imperative, generate jobs and decarbonize the grid. And the 2 best examples are, number 1, when you look across the United States, we have underinvested in transmission lines. The reality is there's about 2,500 gigawatts of capacity in development that is waiting to get on the grid, a staggering number, but we need the transmission lines to get it on the grid. To date, it takes about 7 years in the U.S. to build these transition lines. With fast-tracking permitting and other work with states, you can cut that time in half, and some would say even more than that, which is a meaningful unlock. What's potent about that is that it also creates jobs, a meaningful number of jobs, and importantly, the vast majority of that is clean energy. So by getting it on the grid, you're decarbonizing the grid. The second area that I think is really exciting is actually modernizing the grid. There's another 100 gigawatts in the United States that the Department of Energy has estimated could be unlocked if the grid is modernized, applying what's called grid-enhancing technology, something like conductors online so that you can get more capacity through. And again, that creates jobs. It unlocks assets that are here that are being underutilized because they have not been modernized. So I think that, again, there are a number of different solutions at Google. We're working on a whole host of others to improve energy efficiency in chips and in models, delivery, across the board. We can, if resolute, and we take each one of the available assets here and execute against them, we can unlock the energy.
Ruth, is that part of the whole package in this AI race? So Google spent the last, quickly actually caught up with OpenAI in the last 2 years. How are U.S. companies doing compared to China, for example? And is the energy complex part of that race?
So energy unequivocally is important. I think the U.S. is ahead in models and in chips and continues to be. I think what's very important is China, as we saw with DeepSeek, is a very active innovator and working assiduously on AI and the application of AI. So I think there are three critical elements really for the U.S. and the West. Number one is you need to have the energy infrastructure to deliver the upside. And China is focused there. It's not just nuclear, it's also in solar. They're building out whatever they can to have that long-term infrastructure needed to deliver the upside from AI. We have tremendous resources in this country. If we avail ourselves of all of them, we can win in this regard. The second is the application. So the upside only comes with each one of us actually unlocking the upside from this, as I've already talked about. Anecdotally, we're hearing China is actually very focused on the application of AI across industry. It's imperative we each do that. It puts us in a better, each company, each country in a better competitive position. And then I think very importantly, it is about embracing and working closely with our allies. And so one of the things I'm very proud of is the work we're doing around the globe. Every head of state with whom I meet says, we want to be a part of the digital transformation. We see not just the economic upside, but we can address healthcare requirements. My oncologist, I loved a line he said to me. He said, the only way to democratize healthcare is with AI, because then you actually have a partner to anyone around the world who can deliver this. We're doing amazing work, I think, for example, in Africa on maternal care. There are so many areas where it is available to us now. So they're saying we must be a part of this. That requires, as we look at it at Google, engaging to unlock products and services, which means investing in technical infrastructure, and very importantly, skilling people so that they have the capabilities to actually evolve as the jobs evolve. I view that as a critical triangle, the services, the infrastructure, and the training. And I'm intrigued wherever I go how often I'm asked for first, help me with the training. We just actually announced, which will be talked about here this week, a very, I think, exciting effort across Africa where we're building out subsea cables to ensure connectivity, resilience, and security across the continent, and really with 4 hubs, as well as incremental AI digital skilling. And this is really important because a third of the globe still isn't connected. And if you're not connected, you're not going to get the upside from what this offers.
Ruth, we're almost out of time, but actually an important question on responsible AI deployment. What does that look like to you? What are some of the questions that the leaders here need to ask?
All right, that's our own Francine Lacroix speaking with Ruth Porat. Of course, she is the Chief Investment Officer at Alphabet. They are at the Bloomberg Philanthropies Global Forum here in New York, and everyone is hanging on every word coming out of the C-suites from these hyperscalers. So if you want to continue listening to Francine and Ruth, you can type LIVE GO on your terminal, live GO on the terminal to get more of this Ruth Porat conversation. I want to get back to Andrew Slimman right now, Senior Portfolio Manager at Morgan Stanley Investment Management. And Andrew, while we're on the subject of AI, on the one hand, it looks like it still has phenomenal pace to grow, a lot of these businesses, and not massive PEs. If you look at NVIDIA, for example, trading at only 4 times forward earnings. On the other hand, there has been a lot of criticism about what looks like a circular economy that's developing, where they're all kind of just passing the same money around inside the Stargate environment. What do you think about that criticism?
Well, I think vendor financing is, it raised the flag, but it's not necessarily evil. I think the bigger issue, Matt, is the market right now is focused on revenue growth, right? But this reminds me of the early stages of the internet rollout, where we rewarded the carriers who were going to carry all this information. But what happened ultimately is they had to raise a lot of money to finance that, and the market moved from revenue growth to return on invested capital, return, and that's when the market market pivoted away from the carriers. So I think that's the danger right now, is who is generating the true returns that's not debt financed. As an investor, I think that's the danger, because I think the same thing will happen eventually, is the market will reward those who are truly generating a return versus the debt financing that's fueling revenue growth. That's where I feel like we're in right now, that stage.
Speaking of huge amounts of debt financing, Andrew, I mean, I gotta believe on your mind is the Oracle bond sale, looking to raise $15 billion. Part of that is a 40-year sale, which is incredibly rare and maybe really tricky for a company where who knows what things will look like in 40 years. But the spread is incredibly tight. The yield is something like 6%. What does it tell you that this type of company is able to go to market and raise debt that looks so favorable to them?
Yeah, I'm not a bond expert. The credit spreads are tight right now, so there's a lot of liquidity in the bond market, which goes back to our original conversation. Was as rates, short-term rates, come down, money needs to find a new home. It's going to go into the equity market, but it's also going to go into the bond market, and so bond managers are going to see inflows just like equity, equity products, and I think that they need to invest. So, spreads are tight right now. It doesn't surprise me.
All right, Andrew, great to get your commentary. Really appreciate it. Andrew Sliman there of Morgan Stanley Investment Management. He manages the global concentrated as well as the U.S. core and global core mutual funds over at Morgan Stanley. Coming up, Alibaba's CEO sees CapEx topping $4 trillion with a T, $4 trillion by 2030. That's twice what Bain said yesterday about AI revenue. We'll discuss with Bloomberg Intelligence's Mandeep Singh. This is Bloomberg Open Interest.
When we look at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of...
On the mayoral race, this is Bloomberg.
Let's suppose you hire people in this business and they start losing money.
Yeah.
How long before you say, this isn't for you?
When we bring people on, we're looking for a previous record of success. So we don't train people, particularly on the investing side, right out of college. They would have come with already experience. Then there's also the why are they wrong or why are they right? Are they right for the right reasons or are they wrong for the wrong reasons? And then there's also collegiality. How do you work in a team? But I would say that within a 2 to 3 year period, we, usually you get a sense whether, someone's talented.
Do you ever hire English majors or history majors, or you only hire STEM majors?
I encourage my boys to go to liberal arts and to B in whether it was poli-sci, economics, and be fluent in other areas. So I think having a broad perspective can be very helpful.
If somebody is very good at what they do you say to them, you're very good, but go to business school, or you say, don't go to business school because you're very good at what you do?
So I didn't go to business school, and I think that the markets are a great business school. So it's we don't encourage people to go to business school. We encourage them to take the CFA. That's a good way to get more technical trading. If it was something that they feel they wouldn't be complete without going to business school, there have been people who've done nicely with us who've wanted to go, but that's been more the exception.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Wednesday morning from the Bloomberg. No, we're at the Plaza Hotel right now. We're live from the Bloomberg Global Forum, taking place alongside the United Nations General Assembly in New York. This event brings together heads of states and business leaders to address the world's most urgent challenges and opportunities. Tom Keene and I have been here since 7 a.m. We're going to be here for the next couple hours. Scarlett Fu and Paul Sweeney with the Bloomberg Intelligence Program. We're going to have a lot of excellent guests coming here from the Plaza Hotel in Midtown Manhattan. We're going to kick it off with Tyler Kendall, Bloomberg Washington correspondent. Get the latest UN news, President Trump's speech, as well as some UK comments as well. We're also going to bring UK Deputy PM David Lamb. He's going to be with John Micklethwait. We're going to tap into that as well. Ben Way, head of Macquarie Asset Management. He's going to join us here live on some of these markets here. And Jason Wright, Managing Director and Head of Investments at Ariel Project Level on Private Equity Outlook. Getting a little tough out there. Talk about the sports investment outlook as well. So we get a lot of smart people coming in live here. Scarlett Fu and I, we are live here again at the Plaza Hotel. Let's kick everything off right here and get a Bloomberg Business Flash with, I don't know, John Tucker, Lisa Mateo. I'm not sure. We'll see.
Yes, you guessed right. My Lisa
John
Mateo
Tucker,
impersonation is not up to snuff. We're data dependent, guys, so let's start there. New home sales. This is an eye popper. Month over month, up 20.5%. Economists surveyed by Bloomberg were actually looking for a decrease of 0.3%. Right now, the major averages kind of mixed. The Dow up 42 points. The S&P 500 3 points lower. The Nasdaq 100 is down 10 points right now. This is kind of setting the theme for today's trading. Alibaba, those shares surging to the highest in nearly 4 years. They have revealed plans to ramp up their artificial intelligence spending. Oracle is seeking to borrow $15 billion from the investment-grade bond market. This is going to include selling a rare 40-year bond. Oracle does need the money. They're projected to spend hundreds of billions with a B dollars to rent and power data centers. Meantime, Anda Gotti at PNC Bank remains bullish of equities.
I looked at the itinerary, the agenda, and, you know, we're going to be here, but I'm missing out on a lot of good stuff.
Yeah, there's a lot of good speakers here talking about some of the global issues here, which is, this is the time and place to do it, the week with the United Nations in session this week.
Although, you know, yesterday's speech by President Trump definitely sets the tone, at least from the U.S. side. There's kind of the U.S. and then there's the rest of the world, it feels like.
And we had some guests here this morning talking about whether it's climate change and some of the initiatives and investments that need to continue to be made there, or whether it's just geopolitics in general. And I think that kind of what Tom and I took away from our guests was the rest of the world's moving forward. And if you want to come along, great. If not, fine.
Right.
And that's kind of
And they'll figure out their own alliances. They'll figure out their own way forward. But very much the U.S. is staking this position of this is where we stand. And, you know, this is a 180-degree turn from what it was 3 years ago, last year at this time. And we're moving forward.
Yeah, we just had Admiral Mullen on, the former Joint Chiefs of Staff, and he said again that the you know, the military, the morale is great, and they're moving forward, and they're ready, mission capable, and the folks, the men and women on the ground are you know, they're doing their jobs every single day. So that is a good thing, despite what may be happening at the higher echelons of the Pentagon and so on. So that's kind of what you want to hear. So and looking at the markets here today, not a lot of movement here. I'm going to call it pretty quiet right here. We've got a little bit of green on the screen. The S&P's up 1 point. The Dow's up 59 points.
Minimal moves, really.
Minimal moves, yeah, exactly. So
there's a lot of questions about valuations. Earnings season is going to kick up soon again, middle of next month, maybe a week or two in, and lots of questions about whether the results will justify the gains that we've seen. We know that the second quarter earnings season was very robust.
Very good.
And took a lot of people by surprise, especially since companies are determined to move forward even with all the uncertainty that the tariffs have created.
Yeah, and what we saw from a lot of companies is that they were, by and large, taking some of those, any cost increases that they had resulting from the tariffs, which are probably still in the early days there in the second quarter. They were trying to take them in the margin as opposed to passing them along to customers. We'll see how that plays out in the third quarter results. But again, double-digit earnings gains in first and second quarter. The expectations, I think, are a little bit of slowing, but still pretty solid earnings growth this year. And that's, as you were mentioning, that's kind of what this market needs, because this market's not stopping for anybody right here.
No, it isn't. In fact, it was interesting. I was in the makeup room this morning, and one of the economists that we talk to regularly, very well-known economist, stopped by, and I said hi to him, and he said, "Oh, this stock market." And I know he's not someone who looks at the stock market on a daily basis. He keeps track of it, of course, but you know, that was his first thought. Like, it stops for nothing, and you know, it's. Maybe there's a contrast here between what we're seeing globally with the global economy with what the stock market is pricing in.
Yeah, and you know, I guess another tailwind for the stock market is the Federal Reserve, and we've got that one rate cut, and that the expectations, if you look at the WIRP function on the Bloomberg terminal, is for maybe a couple more rate cuts this year, and maybe even some more going into next year.
Well, that's a market's perception, right? And then you have the Fed's perception, and of course, personnel is policy, and the Trump administration is doing what it can to change the personnel of the Federal Reserve Board to get the policy that it wants. Right now, the central bank is a little bit more hawkish or less dovish than the market is.
Right, exactly. So we'll see how that plays out. But again, if you're kind of bullish on this market, the courage to be in the market, as Tom Keene likes to say, you know, you're banking on some continued solid earnings performance from corporate America, and you're betting on a continued decline in interest rates there. So we got a little audio problems, which we're having.
This is what happens when you're in the field.
Yeah,
you know?
exactly right. And
we did get some data, which I want to just point to. We had new home sales at the top of the hour, and I think John Tucker mentioned this, but it's worth mentioning again.
Let's do it.
That new home sales rose 20.5% in the month of August.
Wow.
The expectation from economists was for a drop of 0.3%, which is pretty remarkable.
That is.
In terms of the actual numbers, 800,000 new home sales when analysts were looking for 650,000.
I wonder why it moves so dramatically 1 month to the next.
Yeah, I mean, new home sales is not the biggest part of the housing market, right? The biggest part of the housing market is existing home sales, homes that are already constructed and people are just buying it basically on the secondary market. New home sales is new construction, is totally different.
Yeah, and you know, what you're hearing in the existing home market is there's just not a lot of activity. It's tough to be a real estate agent these days, I think, because there's just not a lot of activity. Of, you know, people are sitting in a home in a 3%, 4%, even a 4.5%, 5% mortgage. What's the incentive to kind of move and take on a mortgage that's going to be north of 6%, I mean, closer to 7%? That kind of takes a lot of the fun out of it, I think. So
I talked to some brokers in San Diego when I was there last week, and they were saying that buyers have become a lot more particular. They've become a lot more demanding because if they're going to pay these kinds of prices, and of course, affordability remains an issue, and the mortgage costs are still pretty high, then they want everything that they're looking for. They're not going to compromise. And so, whereas before, when it was a hot market and there was a sense that prices could still go up, they're willing to compromise. Very few people are willing to compromise right now.
Yeah, and it's interesting that home affordability issue is just crucial. And I remember Drew Redding, who covers the housing market for Bloomberg Intelligence, he's out with this little nugget every time we talk to him that housing prices are up 50%, 50, since 2019. And that is just extraordinary. Combine that with higher interest rates and the whole affordability, particularly for younger people, first-time buyers, it's got to be just brutal.
Yeah, I think young people have given up on the idea of owning a home.
Yep. All right.
And they've got to move on.
They got to move on. Renting, I guess, is the new thing here. All right, let's get the latest coming out of this United Nations, coming out of Washington, D.C. We do that with Tyler Kendall, Bloomberg Washington correspondent, joins us here. Tyler, what's kind of the we've got 24 hours of kind of look behind us now at the speech President Trump gave at the United Nations. What's the feeling from some of the sources you're talking to about how that speech was received by that audience?
Yeah, hey, Paul. So there's a few different threads that we could pull on here. I was there yesterday at the UN General Assembly during President Trump's speech, and the room was rather quiet, though I think it's fair for us to say that at least some of these leaders were probably expecting the onslaught of criticism, since it was widely expected that President Trump would take aim at the UN as an institution, though perhaps not as far as he ended up going. But I really think that the real news that came out of yesterday were some of those stunning developments when it came to President Trump bolstering his support on Ukraine. And that really seems to be where everybody's focus has turned to. of its territory. Just for
recently again, they got